Guys, thanks for joining us here in the charts. This is the market beast, Napoleon Macro. What we're going to do in this video is take a look at the overall markets. We're going to take a look at the NASDAQ, the SPY, S&P 500, and the Dow Jones to see if we can make sense of what is going on. A lot of sell pressure entering the market. We're going to keep this super simple. I'm going to have something very specific for the day-to-day folks out there who follow the markets on a day-to-day basis. If you are a long-term investor, I have something special for you in this video as well. So let's keep it simple and short and sweet. So let's get right into it, guys. So welcome back, loyal family. If you're new here, we only explore price action. Welcome in all of our new subscribers. Let's go ahead and dive right into what to look for in the charts on the daily and the weekly chart here, shall we? So today's January the 19th. 2022 in the previous close. So we're going to start with the S&P 500. It's going to be $4,532.77, slightly negative 0.9% for the day. Okay. Well, there's a lot of sell pressure, man. Hopefully you guys are executing your strategies. What we're going to do is let's actually start with a day-to-day, guys. So if you are pulling up your charts out there day-to-day, I am using tradingview.com. What you're going to look for is very simple. It's super simple. Let's get into what that is. You guys know my infamous lines, my 50 and my 200 exponential moving averages. You're going to pull those lines up. And if the price, which I think the price is below the 50, the green line, let's actually clean up our chart here. So on all of these assets, the price is currently below the 50 exponential moving average, the green line, okay? So the only thing you're going to focus on is the red line. And the red line is the 200 exponential moving average. So that's what we're going to go over in this video. So that's basically $4,399 as of current day. These levels do change with time as they curl up and down with the price. If the price is above that moving average, it typically tends to curl up or go sideways if the market is experiencing a pause or a sideways consolidation. If it's moving to the downside, then naturally the moving average tends to curl in the direction of the price action. Okay. Hopefully that was a good explanation. Let's move it on over to the NASDAQ. If you are a daily participant, you should look at this level. The previous close of the NASDAQ is $15,047.84, slightly negative 1% close for the day. It's actually dangerously close to that level there, guys. The 200 exponential. I didn't explain exactly what you're looking for. So basically what you want to see, what you don't want to see actually, is a daily close below the 200 exponential moving average. For the NASDAQ, that's going to be $14,959.79. Please kindly pull up your charts, guys. We have a link in the description. You can simply click that link, start a new, we'll just kind of start an account with tradingview.com. I don't get anything from that. I just really like the, it's a very robust, at least to me it is, exchange or platform rather, where you can pull up your charts. Okay, so yeah, just pull up the EMA. You're gonna go to where it says indicator, just type indicators and click in where it says search, type EMA, and it should be the very one at the top should say moving average exponential. Okay, so pull those up on your chart, guys. 50 exponential, 200 exponential. All right, moving on over to the Dow Jones. In the previous close is gonna be $35,028.66, slightly negative close, 0.9% for the day. Okay. Same thing for the Dow Jones, guys. It's right down here. Has a little way to go there. $34,529.75. So if the market continues lower tomorrow, that's fine. Hopefully we get like a nice little pause, because remember that the slow methodical moves is what we look for. Okay, the controlled selling, the big drops is what we don't want to see. If you're new here, we explain this a lot. The big drops, that's the big boys. They're unloading on the market. But if it's this, it's kind of slow gradual move down, we got a little move down today. So if it gives kind of a little pause, a little push up tomorrow, that's buying. Okay, and it kind of moves down gracefully again tomorrow or the following day, that's fine, guys. The slow move down, that's what you want to see. And that's basically the market in preparation to move higher. Okay, do I think we've topped out in the financial markets? I'm honestly not sure, guys. Let's move on over to the next. Last but not least, we're going to take a look at the SPY. Previous close of the SPY is going to be $451.75, slightly negative close, 1% for the day. Okay. All right, so the same thing for the SPY, guys. Simple 200 exponential is currently at $438 84 cents. And that's going to complete all the information that I have for the daily participants. Let's pull up the big boy candlesticks. Well, not the big boy. I mean, this is kind of the lower time frame for me, the weekly candles. And what I want to do is we've already gone over the price, so we'll just kind of scoot that on up. Well, we kind of leave that visible. What we're going to do is pull out our Fibonacci retracement. Now, you will have to have a very basic understanding of Fibonacci retracement, but it's nothing complicated if you're kind of new to this. And I'm just going to explain in great detail. Well, it's really simple, actually, on exactly how to pull up the Fibonacci retracement level. So if you're a long-term investor and you just want to kind of have a basic understanding of the short-term price action, what you're going to do is pull out your Fibonacci retracement. It's over here to the left of the screen. Like if you're looking over here, it's, I think, the third from the top, and it's basically the Fibonacci retracement level. Okay, so you're going to go ahead and click that. And what you're going to do is, before I click that, you're going to actually, here's how you measure it out. You start from the low. I measure from the lowest wick. But you see how kind of like this price action, see if I can really make this basic, like all this price action. You're just looking for higher highs and higher lows, right? So you see how the market goes. Sorry, guys, a little unprofessional here. Thank you for your patience. Up, right? High, higher high, down, higher low, up, highest point ever in the SPY. And so basically the way that you measure your Fibonacci retracement is by simply going back to the most recent higher low. Okay, so you measure the most recent higher low, and then you extend it all the way to the highest point. And then when you pull out your Fibonacci retracement level as a long-term investor, if you want to just kind of know, I'm just measuring out my fib exactly how I explained it. There's my infamous lines, red, white, and blue. If you want to have a basic understanding of what's going on in the market, you're only going to look for two levels. Okay. If the price comes down to the white line, which is the 0.618, okay, very familiar with that level, it's going to be at $447.14. So if the SPY goes down to that level, then it is still a healthy uptrend as long as it finds support there and has a nice move to the upside. Then the trend will continue. The trend is your friend until the end, the cliche, okay? But if there's a deeper retracement, that's still okay. Everything is just fine, right? It'll go down to the 0.786 level, and that level is at about $438. Hopefully find some support there, maybe a little bit of clustered area of price action. And then as soon as it breaks back above that 0.618, oh yeah, you better get out of the way if you're selling this market, because it's in preparation to rip to the upside. All right, I guess we can kind of go over them. I kind of want to leave you guys with some homework. That's kind of weird. So you kind of pull these levels up yourself, but I mean, you should know how to do it, right? Have your basic understanding. If you even, entertain Fibonacci. Maybe you're like, dude, this weird Fibonacci stuff, that's kind of weird, man. No one does that, but it's really powerful, guys, when you use them the right way. All right, let's do this. S&P 500, start from the lows, and you measure to the highest wick, okay? And let's see where the S&P 500 is. It's kind of a long video, right? All right, so the 0.618 is going to be at $4,486. It's a little bit away from that level. Next level down, if that level does not hold, is going to be the 0.786, and that's the $4,396. It's going over to the NASDAQ. See if we can measure it out. Seems like the NASDAQ is under a lot of pressure, guys. We're going to do the same thing, measure from the lows, pull it up to the highs, and it looks like we've already broken down below that 0.618, which is fine. The 0.786 level, $14,902. Taking it over to the Dow Jones. All right. Wow, this is kind of, oh my goodness. I actually didn't even see that, guys. The Dow Jones just made a double top. That is not bullish. That is not bullish. All right, so there's nothing really to measure here on the Dow Jones. Because if I take it from the most recent low, or kind of like this low here up to here, then it's probably already below both levels, guys. Man, this Dow Jones is not, I don't like the way this is setting up. Wow, that's interesting. Okay, so it's not below the, I didn't mean to scare anyone by saying that. I didn't realize there was a double top on the Dow Jones. That's pretty intense. It's below the 0.786. But this is actually an active weekly candle, so I can't necessarily say it's going to close this weekly candle that I'm pointing at if you're looking at the screen. This is an active weekly candle. Right now it is below the 0.618, but it has not closed this weekly candle. We still have 1 day and 19 hours. So we'll have a freshly minted weekly candle on January the 24th, 2022. Okay. The blue line, did I say the white line is going to be $35,137. The blue line is all the way down at about $34,600 and $34,640. Okay. So that's all I have for you, wonderful folks. Hopefully, you guys have all the long-term investors should be set for now. This Dow Jones, man, wow. Yeah, wow. I did not see that. Okay. But you guys should be set for now. Hopefully you enjoyed that. Hopefully you learned something with the Fibonacci retracement levels and the moving averages, which I keep it really simple, guys, okay? I don't clutter my charts. I just keep it very simple. And that's the end of this video. I appreciate your time, guys. If you don't mind supporting the channel before you go by leaving an appropriate thumb, I would truly appreciate it below the video if you enjoyed the content. And leave a comment so that the YouTube algorithm can promote this video on the channel. Thank you for your support. If you guys are new, we also explore the alternative markets. If you're into Bitcoin and altcoins, you can kindly subscribe with us at the bell, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing within you. We'll talk soon, and bye for now.